Woohoo! There seems to be some confusion on the market about rates. And here's one who's waiting to buy later could end up paying a lot more. So it's a fascinating time in history right now if you follow the Federal Reserve at all. And if you're a loan officer and that sounds boring, then you might want to consider changing careers, because when the Federal Reserve speaks, we need to listen, because that drives all the interest rates in our market. So let's talk about this. I've heard a lot of realtors say they're shocked that rates are like high fives, low sixes, right? Depending on credit score, primary residence, loan program type. For 30-year fixed, yeah, you can arms in the fours, but 30-year fixed are definitely high fives. And why is this? Okay, so we had some market volatility in the beginning of the year from the Federal Reserve's announcement. They caused all that market volatility in the stock market in January, and rates went up. Then they announced again that they're going to raise rates 0.25% every time they meet through the end of the year. So they did that when rates were about 4.5%. They made that. So 6 more meetings, 0.25%, 1.5 more, 4.5 plus 1.5. And we know that they don't directly drive rates, right? We know that. That's a whole separate conversation. 4.5, 1.5, 6% rates by the end of the year. So any of your realtors that are thinking rates might drop, I guess we can all think whatever we want. But the bottom line is the Federal Reserve's already announced what they're going to do. Never before in history has the Federal Reserve announced so far out their plans. I mean, this is a big deal. This is their plan to combat inflation. So interest rates are up. We'll actually talk about housing supply and demand in another video. So be sure to subscribe if you don't want to miss that one. And please like and share this one. So, but here's the bottom line. Housing prices are going up because we have a shortage of supply, right? You go back to basic economics, supply and demand is what drives the market. That's why as long as this is my 20th year almost, as long as I've been doing this, the interest rates always go up in May and June, summer home buying season, except for during COVID. But other than that, they typically go up every spring. That's supply and demand. So how are going up? Because we have limited supply. And interest rates are going up because the Federal Reserve already said at this point now, forget that 1/4 point. They're talking about raising rates 0.5 point in May and 0.5 point in June. That's a full point in the next 2 months. So if we're in the 5s now, we're going to be pretty close to 7 by the time June rolls around. And in case you haven't noticed, the market hedges as soon as they hear that before the actual announcement. The market hedges to what the Federal Reserve says they're planning to do. So if you have clients that are waiting to buy, the likelihood is they're actually going to pay more for a house and at a higher interest rate. So please make sure that you and your realtors are speaking to them and educating them about how to get their offers accepted. You haven't got that, click on that download for sure. That's a freebie for you, my gift to you. And please share this video with another loan officer, with another branch manager, with a realtor, with any of your strategic financial referral partners, like a CPA or a CFP. Everybody needs to know what's going on in this market. I'm actually quite surprised at the number of people who don't understand where rates have gone. I've seen actually a lot of chatter in the past week about, oh my gosh, I had not my clients. They get a fully educated conversation. But I've seen a lot of buzz in the market about, oh, I thought I had this deal and then now my loan officer is ripping me off. No, your loan officer is not ripping you off. Your loan officer is passing on to you what's happened in the market. The issue is they should have called you if you had a deal in process and they didn't lock you. They should have called you. And you should also be educated and read your financial documents. And as a client, if you don't ask questions, this is our job as loan officers to explain the loan estimate and whether it's floating or it's locked, right? This is our responsibility. Now, if the client doesn't want to talk to you about it, it's e-sign, click, click, click. That's on them, right? But I mean, even with my builder business, I have clients that I've said, hey, we have long-term locks, 4, 6, 12 months. They're deciding not to lock. That's on them. I don't understand. But again, as far as I can tell, all the industry stats, housing supply, and the federal announced that they're raising rates. So the longer you wait, if you're not already under contract, you're going to pay more for a house, plus supply chain issues. Throw that in there for any kind of new construction. So you're going to pay more to buy a house the longer you wait right now this year anyway, and you're going to pay higher interest rates on that higher sales price. So exponentially, boom, 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 higher, higher, higher. This is why interest rates aren't dropping. Share this with a friend, like and follow. Cheers to your success, because I've always believed an educated consumer is my best client. And that's why I help you guys, the loan officers and the branch managers, guys and gals, with all the info you need to know.